Good morning, it's Steve O'Hare from Signal Stream Talking Bull, and we're looking at the 17th of April today. It's 8 o'clock. Welcome to the show. Welcome to a new week of trading. Joe's not here today, unfortunately. I see a lot of you look very disappointed, but I'll do my best to get us through the markets this morning. We're going to cover off the headlines from Friday and over the weekend and dive down into the technicals of the markets before having a little bit of fun with Gunter Head. So let's kick things off looking at US retail sales declining 1% for March compared with expectations of a 0.4% decline, while there was a slight upward revision for the February data to a decline of 0.2. Underlying sales declined 0.8 after being unchanged the previous month, while the control group declined 0.3%. University of Michigan consumer confidence improved to 63.5 for April from 62 previously, and slightly above consensus forecasts, with net increases in the current situation and expectations component. The one-year inflation expectations jumped to 4.6% from 3.6%. Big old jump there. The previous month, despite a decline in headline inflation data, while the 5-year index held at 2.9. Inflation expectations data hardened expectations that the Federal Reserve would have to raise interest rates again at the May policy meeting. Fed Governor Waller stated that recent data shows that the Fed hasn't made much progress on inflation and more interest rate hikes are needed. He added that monetary policy will need to remain tight for a substantial period and longer than markets expect, with the extent of further increases depending on the data. He did, however, add that he didn't think that rate hikes will need to be quite as high as in February. The dollar was looking for a limited correction ahead of Friday's US data, and there was a sharper move after the data on inflation expectations and Waller's comments, with an aggressive round of short covering and short sterling. The latest CFTC data recorded a further decline in sterling shorts to below 2,500 contracts in the latest week from near 5,000 previously, and the smallest short position for over 13 months. The latest New York manufacturing survey will be released today. The survey will be important given the recent weaknesses in manufacturing sector. And the last 4 months also recorded contraction. So that's where we are on there. Let's dive straight into the markets. And as normal, we're going to dive into cryptocurrencies to start with. I'm going to go through these, then commodities. We'll take a look at FX. So if you'd like to see any FX at all, or I'll take a look at different markets. I know there's a lot of guys out there that like to trade the yen pairs. So do let me know and I'll try and pick them up as we go. So yeah, let's dive into it. Bitcoin. We've had a little bit of a reversal in Bitcoin. Obviously, these are the charts. You're probably bored with these charts that I show you, which has shown this resistance over the. Let's try and get rid of this. Here we go. The resistance area between 28,500 and 32,500. Now we did manage to break up into this area of resistance, and we've run into a little bit of a brick wall at 31,000. So that's for people who are looking to sort of the bulls of this market, really looking at where the support area is and looking to attack this resistance area one more time. 31,000 is the level to watch. We've broken down today. Over the weekend, obviously, we sort of listed a bit sideways to down. Support initially will be coming in around about the 29,670 area, but obviously below we've got major support at the bottom of this band, 28,500 area, and you can see what work it did there. We were really working hard, really, between 17th of March and the 9th of April. So for almost 3 weeks, we've had price action hovering below these lows. Finally broke up last Monday, this time last week, and maintained decent levels all week. Get rid of that ATR because it's very distracting. So overall, we've got this bottoming formation. This is almost like an inverse head and shoulders formation. Now, the measured move target for this is a move to around about 35,000. Haven't quite got there yet, but you can see we've done plenty of work on the downside here. The neckline is one of the most important support areas for Bitcoin longs at the moment. That comes in at 25,400. So that's the level to watch out for. Ethereum has done well also on the back of this drive to crypto assets. And we have taken out the resistance from the 13th of August last year at 2030. Sitting up here, we got up to 2,140 and pared back those gains. That was yesterday's high. So that's the highest level we've seen since all the way back in May last year. So almost a whole year, like 11 months high there on Ethereum. Support will be in the form of the previous resistance, which should now turn into support. That's at 2031. Below there, we've got further support again at those levels that we saw in Bitcoin, where we spent a good part of March and some of April going sideways just below the previous resistance. 1843, 1850 is level to watch in Ethereum. XRP has also stalled at a previous swing high. We actually got up to 58.48, very similar to the actual previous swing high in September. So got up to 55.80 there. Took out that high, but rejected, and prices have remained below that 54.60 level. So on the downside, we've got good support really anywhere between the 42 and the 40 level, and then the major one down at 35.46. They're all cents, remember, not dollars. XRP. Let's take a look at commodities now, because gold had a bit of a humdinger on Friday. I was watching this from afar, and it did form a bearish outside candle on the daily chart. Now, do remember we're very close to all-time highs. We managed to get up to 2049, we'll call it. So that's only $25 below the all-time high. And then Friday turnaround was quite significant. We saw a really, really big down day, one we haven't seen since probably we saw a similar move on the 21st of March when we reversed from the initial attack above the 2000 level, got up to 2010, then reversed really sharply all the way down to 1932. So yeah, after we gave up those gains on Friday, we managed to get down to below the 2000 level. So that's that's always going to be quite a significant psychological level. And obviously a lot of it was based on the dollar. Now dollars settled back down now. The dollar index trading at 101.56. Let's take a quick look at the dollar index and see what happened. You can see the bullish outside candle on Friday, and that's at the previous swing low level from the 2nd of Feb. So that's quite a significant reaction from there. Really looking to see whether this upward revival can continue in that dollar index. Wouldn't hold out a huge amount of hope, but it's a good start. It's a good base for dollar markets. So watching that, and if as we know with gold, if we do get that dollar perking back up and looking to move higher, then that will impact on the gold price to the downside. So at the moment we're trading around just above one of the previous swing highs, 209, 210. We're trading at 2015, and really sort of like making an effort to pull back from Friday's significant losses. So we did have over a $57 move to the downside. That's pretty significant. Looking at crude oil also. Crude oil, remember, OPEC plus nations really thinking about, well, they're cutting production, and this has led to a gap higher on the charts from the Friday, the 31st of March's price action, where we were trading around about the $75.50 in WTI crude. Saw a big old jump higher, nearly a $4 move over the weekend, and prices haven't been back down below there. So we do have support really between there. That would really be a level to watch, if anything, if we do get back down to test that anytime soon. Obviously, it's a bit of a breakaway gap as well, because we've had over a week's worth of price action, which we haven't gone anywhere near that level. It's almost 2 weeks now. And yeah, we're really sort of looking to retest that at some point. We seemed to do it last Tuesday and projected higher again. And we actually ran into the 200-day moving average on WTI crude oil. And prices have been capped around those levels. So that 200-day moving average coming in at 82.54 today. We're trading just below that at the moment. So remember, the real support level coming in around about the $79 level, and we do expect to see some sort of vacuum trade there. If we do break down below there, then something has changed significantly, and we could expect quite a fast move lower. On the upside, we are trading at previous swing high levels. There's a good amount of resistance here, but it does open up slightly if we manage to break above this 200-day moving average. So that's the real resistance level to watch on the upside. Brent crude, what are we trading now in Brent crude? We're trading at a $3.60 premium to WTI crude oil. You can see we are lagging a little bit where that 200-day moving average candle moving average is concerned, the moving average line. So we are trading around resistance that we saw. We got up to here 13th of Feb and the 7th of March, and we seem to be capped slightly at the moment by this resistance level around about the 86.70 area. Next resistance is 89, and being between those, we've got the 200-day moving average coming in at 88.32. So plenty of resistance on the upside, but again, remember, it does feel a little bit fragile because we've got this gap on the chart between the end of March and the 3rd of April, and that gap comes in, or the support comes in around about the 83.40 level. So that's the one to watch there. Natural gas seems to be trying to do a little bit of a supportive play around these lows. We managed to get down to around about the 207 level again on Friday. That was a swing low from the 6th of April as well. And we've opened up with a gap higher this morning. So natural gas looking to challenge that neckline resistance. Now, if we do manage to break above there, that comes in around 232.60. That would signify potential for a double bottom. If we get a close above that level, that would confirm it. So watch that level closely. 230, let's call it 233, just to be sure, and 207 on the downside for natural gas. Right, let's dive into Forex. Let's take a look at the majors, and then we'll dive into your requests. We're looking at requests so far. Mark's asked for sterling yen and Aussie Swiss, and one is asking for euro yen. So we'll have a little bit of a look at those. If there's any others, throw them into the chat and I'll get to work on them. So looking at euro dollar, obviously significant move with the dollar strength really sort of like smashing home a little bit of an advantage on Friday. And we have been lower also this morning, overnight as well. So there seems to be a little bit more momentum to the downside at the moment with euro dollar. Obviously, dollar strength, this is going to be euro dollar weaker. And we did get up to sort of like pretty significant highs and levels we haven't seen since 31st of March last year. So again, 11-month highs there. Nice bearish, almost a bearish outside candle, not quite though. So there's a little bit of hope left for the bulls at the moment. Significant support really coming around this 109.72 level. If we manage to break down below there, it's going to be a bit sticky to the downside because euro bulls will not have given up or won't give up too easily. We've got a few moving average lines way below some levels we probably won't see in the next 24 hours at least, but really I'd be watching maybe the 9-day moving average coming in at 109.50. That'll be pretty significant, and then after that we're probably looking at like the low mid to low 180s, really 108.30. something that's as a next support. Obviously, resistance will be at Friday's high. That's at 110.76, and above there, probably a more significant resistance, I would say, would be just under the 112 level, and that would be from this previous price action going back to 2021, late in 2021, November, and also the reaction higher we got from March last year. So they're the levels to watch. That reaction higher, 111.85. So around about 112 is the resistance level euro dollar. Cable also, as we were saying, the lowest amount of shorts in, well, when was it? 13-month lows on the short side. Maybe that sort of could have been impacted actually from Friday's price action. We had a few more shorts enter the market, and we had quite a significant bearish day, and that is a bearish outside candle. So at the top of a range, they're the candles to look out for. Also, there's a little bit of potential here now for a double top formation, and because we've had such a good run out of sterling, these are sort of like the opportunities that don't come up too often. Be looking at this pretty closely. For me, 123.44 is the neckline of a potential double top. Yeah, let's move these arrows over here so you know what I'm talking about. I know they're not exactly at the same level, but they're pretty close. So this will be significant if we manage to break down below that 123.44. That's a level to watch over the coming week. You can see we've got a bit of a crossover going on with some moving averages down here as well. Yeah, overall, a break below there. Measured move target would be somewhere in the region of, well, below them where the moving average is crossing over. Measured move target would be around 121.42. So, you know, definitely want to sort of like put on the back burner for the minute. And dollar yen, we can see the bullish engulfing candle. The low didn't quite take out that Thursday low, so it's still a significantly positive candle. Bit of a crossover on the moving averages, with the 55-day crossing over the 100-day moving average. So quite a significant move has led to a nice turnaround. We've got a resistance level coming in around about today's high, 134.26. Watch that one, and really looking for potential on this chart. It does look like quite a nice bottoming formation for the dollar. So maybe the dollar has got a little bit of more room to the upside. We shouldn't give up on it, obviously, not yet. Let's take a look at the markets. The request sterling yen. Looking at this on Friday, again, we're at quite significant levels. This, I think I mentioned this candle last Thursday, as it's almost a bearish outside candle, but the open and close are so close together. It comes in the shape of a doji, which is a sign of indecision, and that we have seen indecision for Wednesday, Thursday, Friday. And what we're going to see today, we're sort of seeing the similar sort of price action to what we saw on Wednesday and Friday, where prices have opened, they've moved higher, but will it be able to maintain the momentum? It hasn't done on multiple occasions last week. So again, let's see if that indecision is still there, or are we actually making that more like a stronger attempt to take out this resistance at this level and push higher towards the next level of resistance for me, which will be around the 169 mark. Again, it looks pretty decent. Got a little bit of a bottoming formation, but just running out of momentum and steam at these levels. We've got a crossover on the moving averages as well. The 200-day moving average is way down around about the 163 level. The crossover at the 55 crossing over the 100-day moving average. So you've got to sort of like take that seriously. That's a decent crossover. That's happening down at 162. And we are obviously trading at a premium to that at the moment. Got a nice upward trending support line below there. On the upside, as we say, we've got plenty of resistance, a really thick band of resistance from price action between October last year and December last year. So that's what we're running to. That's why it's a bit sticky at the moment. That's sterling yen. Let's also take a look at Aussie Swiss. Aussie Swiss. Well, this looks pretty poor at the moment. I wouldn't be looking to set any longs in here. This is like almost like catching a bit of a falling knife. Let's take a look at the weekly charts to get some perspective of where we are in comparison to, yeah, it doesn't look great down here. We've obviously got this the move we had at the start of the pandemic in 2020, March 2020, and Aussie Swiss was one of the markets that really got hit hard. In fact, making a low down at the 53.46 level. Now, since then, we saw a really strong rally in 2020 into 2021 before price action again was capped and started to turn lower. And really, we saw that from around about the 70 level. We've been under pressure since June last year. So hasn't been anything to sort of like get excited about. If you're looking to for the longs in this market, Aussie has definitely been under pressure with Swiss franc benefiting. And we've just broken a significant support level at 60.27, trading below there. And it doesn't look like there's any real form of support, maybe potentially down to around about 57 to 58 level would be the initial support, but can't really sort of like give any significant specific levels to look at there. But that looks like further downside is inevitable in Aussie Swiss. Let's take a look at also dollar Swiss. It's a request from Rice, and you can see that is also under a severe amount of pressure. We have got some more relative levels that we can look at for where we can take support from. If we take out the tails and get sort of like some closes and opens in there, that comes in at 88.22. That would be a decent test of bearish resolve. But over the last week, it's just been one-way traffic, and quite significant one-way traffic. So 88.22, round about that level or above, or even just below the 88 level, down to 87. 57. That was the low of the 4th of Jan, this year's low. Had a decent rally higher, obviously given up those gains now, formed a nice double top formation in here, neckline broken, 93.80, retested and then extended lower. So yeah, again, measure move target for that is actually way below the support, down at 85.93. Euro, yen, have I covered that? Can't remember. No, doesn't look like it. Euro, yen, looking at this market. Again, we're running into previous resistance levels from back in October. So there, we're getting to some really sort of interesting levels. 147.75. The swing high we got out there was 148.40 on euro yen, and it has been quite an exponential rally. We've had it like 3, 4, 5, 6, 7, 8, the 8th positive day, and we always like to sort of like think about the number 9 when we talk about continuous rallies or consecutive rallies on daily charts. And when normally when we get to 9, it does slow down a bit and has a potential for a greater potential for reversal. It just works. Don't ask me why. 147.73.5 would be for me the real strong, more accurate or a specific level we can get out of this chart. And we're not far away from that, 40 cents away from that. So euro yen looking to run into this resistance, but it's got some life in it yet. So I wouldn't just wait for or stick an order in there to just short at that level. Wait for some sort of reversal candle or reversal formation before taking that on, and that would potentially be a really decent risk reward trade idea. That's the sort of thing we look for on Talking Bull when we go to the gun to head trade idea. So let's take a look at what we do on the gun to head. Now, normally it's myself and Joe, and we pick a trade after analyzing the charts as though we had a gun to a head. We have to make a decision. We can't hang about. We've got to enter at market. We've got a place, a stop, and a target with a risk reward of at least 2-1, and that trade will get closed just before 9 o'clock at night. We don't carry any overnights. We risk 1% of our capital, and yeah, we've done this for a long time with a theoretical account. This year we've gone live. We've actually got a live account going, and we can show you that now. We started with 2000, we're up to 2042, 46. We had I'm pretty sure I had a loser on, let's see if we can get that up. I'm pretty sure I had a loser on Friday. I went for, let me show you this. I went short of Euro New Zealand dollar. I was looking at this pennant formation, which looked, for me, looked like a good potential risk reward trade idea. Place a stop above that break, that sort of like significant neckline level. And yeah, went for it, looking for an extension to the downside on Euro New Zealand. Now, it didn't work out. In fact, it was pretty poor. It rallied all the way back up and took out, but I only lost 1%. So, you know, we sort of like, when we monitor these trade ideas, we actually, our win rate is, I'd consider it quite poor, 40%. But we actually, because we have this stipulation, we have a risk reward of at least 2-1. The fact of that is, it works out that you can still end up with a positive performance, even if you have a win rate of 40%. Normally on our intraday trade ideas, it's a bit higher than that, and so that's more successful. But for the purpose of this, we've gone with, let's see if we, yeah, let's get rid of this now and see what are we going to look at today. I'm going to go again. I'm not sure really, after going through all the markets, where oh, actually, we haven't done indices. So sorry about that, indices. I might have to do an indice now. Let's take a look at the indices. They continue to move higher. FTSE as strong as an ox and into close to the all-time highs. So knocking on the door there, that's looking pretty positive. DAX has extended higher above the previous resistance. That's looking good. Same with Euro 50. Dow has stalled. Friday was like a hanging man candle. So although it made a significant high compared to where we have been, it did reverse sharply lower and has left a hanging man candle. So that doesn't look so bright. Good trade, good sort of like price action from NASDAQ on Thursday, bullish engulfing candle. And then we had a little bit more of a positive move on Friday, taking out the Thursday's high, and S&P also in that bullish channel, looking pretty good. So they're all looking quite nice on the indice front. And let's take a look at where we're going to go. I really sort of like would like to do something like gold, especially after Friday's price action. For me, it's quite significant, but I've really got to sort of like try and get something from the short-term chart. Even on gold, if we look at that, there's these automated Elliott wave graphics on that you can get on TradingView, and it shows that we've potentially completed a fifth wave correction, looking for this ABC fifth wave impulsive move higher, looking for an ABC correction. Not quite at that B level yet, so there's a little bit of work to do on the upside there. So gold and silver both off to a pretty decent start today. Natural gas potentially is one that has run into some resistance. For me, that could potentially be a sign that we have had that gap higher, and are we going to give up that gap? We have stalled at previous resistance, so that's quite significant. So for me, again, this could be a decent risk reward trade idea. Let's see if we can get that on the Oanda charts. There'll be slightly different levels actually. Natural gas, yeah, let's take it from here. We're trading around on this chart 212.20. Quite like the look of this one. Let's go for it. We're going to sell natural gas at market. We're going to risk 1%. Stop on this. 217. Targeting a move to 199.30. Gives us a risk reward of 2.33 to 1. That's around my average that I go for. And for me, that looks like a bit of an opportunity. It's got in just below because there's a spread to consider when you are trading markets. Don't forget that. So that's my trade idea. I'm selling natural gas, really looking to fill that gap that we got on the daily chart. You don't see the gap on around the charts because it is just a continuous price line, but you can see that this over the weekend was where we probably had that gap. Looking for it to really sort of like run into that overall long-term bear trend and resistance and break lower. Nice hourly candle here that's forming. If that continues, then I'll be happy with this trade tomorrow. Right, let's take a little look now at if I can find my way back to where I was. Let me just get back to our original chart. Sorry about this, guys. Just looking for. There we go, StreamYard. There we are. Right. What we got coming up, events for the next 24 hours, 1:30 US New York Empire Manufacturing Survey, that's today. Tomorrow morning, 7 o'clock, Tuesday, UK figure, UK labour market survey, and events for the rest of the week. Wednesday, we've got UK consumer prices, and April the 21st, so Friday, we've got global PMI data. So that's stuff to watch for the rest of the week. So I hope that's been enjoyable, informative, and you've got some benefit out of it. And we'll look forward to both me and Joe, hopefully, we'll be here tomorrow. So good luck with trading, and we'll see you then.